Crypto's most influential figures have once again found something to argue over CT, but no, it's not consensus mechanisms, it's not parasitic L2s or ETF filings. This time it's Solana's so-called perception problem. And it's a debate that's divided the maxis, it's triggered ETH versus Sol tribalism, and even drawn in Toli himself. Now all of this is happening on Ethereum's 10th anniversary as the total crypto market cap reaches a new all-time high. But the real question here is, do institutions, builders, and treasury companies agree that Solana has a reputation problem? Or will they, along with millions of retail investors, ignore the noise and stay bullish for the rest of the bull run? So, to begin with, how did we end up here again? This week's shouting match all started with this banger of a tweet from the Solana intern who wasn't pulling any punches when poking fun at Ethereum's speed compared to Nasdaq's throughput. The tweet kicked off a full-on chain reaction with everyone from the builders, traders, and even VCs jumping in to speak their minds. Even Austin Federa, who was previously Chief Strategy Officer at Solana Foundation, weighed in with, "I wish the Solana account would stop posting this brainwash stuff." Now, it was supposed to be a sarcastic reality check for the ETH maxis, who often promote Ethereum as the backbone of the future of finance.
Ethereum is turning 10 this summer, and the network that once aimed to disrupt Wall Street is now powering it.
But in reality, Ethereum mainnet only processes 20 to 25 transactions per second, when Nasdaq currently does 2,000 transactions per second. 25 per second versus 2,000 per second. It seems worth making fun of. So for Solana maxis who often use TPS dominance as a key metric, the claim that ETH is the future of finance is a funny, even absurd claim, considering Solana's true TPS surpassed 1,700 transactions per second, and all of that without any L2s. Although to be fair, ETH has been outperforming Sol since April, with this down-only Sol to ETH chart looking ripe for the Sol maxis out there to get dunked on. Plus, being down over 50% from the April highs in an industry where price matters so much isn't exactly a great look. But the reality here is that Solana has the right to poke fun at other chains because in the context of TPS, Solana has a far higher TPS than ETH and all of its L2s combined. Now for some, this concern over perception may actually be caused by Sol's lagging price. As the age-old crypto cliche goes, fundamentals magically improve when the token price goes up. So does Solana really have a perception problem? Can we really sit here and ignore the fact that a disproportionate number of the fastest revenue-going apps in crypto are on Solana? Mert thinks not, but pundits and CT warriors nevertheless race to the comments section to completely ignore the humor and destroy Solana with a barrage of Sol to ETH charts, and of course plenty of harsh reminders that the last time a video didn't land too well either. But so did Frankie, who made a compelling case for the perception problem being real when he said Solana already has the technology to support internet capital markets at scale. But many folks in TradFi and TradTech mostly see it as a meme coin or scam chain. The real obstacle is changing that perception. One app with PMF can flip this overnight. Solana Foundation's product marketing lead disagreed with this take because giant institutions in TradFi and TradTech like Franklin Templeton, BlackRock, VanEck, Hamilton Lane, and much more have already made big bets on Solana, suggesting that they don't agree with the notion that Solana is simply a meme coin or scam chain. Mac Brennan here argues that the Solana perception problem is actually psyops, because crypto at large has a perception problem. The average person on the street doesn't think any particular blockchain is pure, but Solana isn't. They see Bitcoin, then they see the rest of crypto. And yes, the rest of crypto has a perception problem. McBrennan adds here that Solana will continue its game plan that currently has it dominating every other L1 and L2 in existence on usage, which is all that matters. The Solana ecosystem has definitely come a long way since the early days of being affiliated with FTX, overcoming serious downtime issues, being called a VC chain, an NFT chain, and of course much more recently a meme coin chain. Good for nothing but speculating on meme coins with tiny transactions. Here's what the experts think. Today we have a Bitwise report on the investment case for Solana written by an analyst and PhD. The report found that in no uncertain terms, Solana is poised to lead the next phase of decentralized application adoption driven by sustainable economics, developer innovation, and execution excellence. The Bitwise report also adds that Solana is a leading contender for institutional and retail adoption, delivering transformative opportunities for investors. So all of that jargon aside, it seems to many that this perception problem exists only among the commentators and less so among the investors. Institutional capital continues to flow into the Solana ecosystem. Solana dApps generated over $30 million last week alone, regardless of any ongoing CT discussion. Now, of course, Solana isn't perfect, but it's never claimed to be either. So when ETH maxis like the one we're about to hear from argue that vulnerabilities being identified and addressed is inherently negative for the network, then it becomes rather easy to poke holes into the argument.
Solana averts catastrophe with quiet patch of major token vulnerability. The flaw would allow attackers to mint an unlimited number of tokens or withdraw funds from any account without authorization. Now to say that that's a big deal is kind of an understatement, because I mean, if they didn't catch this bug, the entire Solana chain would have just failed instantly. I mean, that's irreparable damage.
So without fueling any tribalism here, it's important to acknowledge that problems exist everywhere. Patches and fixes are inherently good when we think about radically innovative systems that improve and iterate incrementally. Solana is one of these so-called radical innovations, and it does exactly what it should do, which is to improve incrementally along with its environment. That is progress. But what feels less like progress, at least to Solana maxis, is revising a 7-year roadmap every other week and starting from scratch. And no, that's not to say Ethereum isn't making progress or that it's stagnated into oblivion, but rather that these two innovative systems have inherently different architectures, and they also have different paths to success. So it's perhaps a bit unfair to claim that this was a catastrophic failure for Solana. In fact, the long list of TradFi giants we saw earlier are all betting large sums on Solana surviving this. Because when you zoom out, the facts don't really line up with the gloom and doom posts that we're seeing this week. We've got Franklin Templeton, BlackRock, VanEck, Hamilton Lane, and much more all building on Solana. dApps are generating tens of millions in weekly revenue. Stablecoin issuance is growing, and usage metrics are crushing every other L1 and L2. So this perception problem might just be that it's ETH's moment in the spotlight right now. Its ETF has been live nearly a year. The biggest ETH ETF just made a new all-time high, and remember, sentiment only flipped positive once the price started moving back up towards 4K. So the same thing will likely happen to Solana once spot ETFs are approved around October. So is this perception drama really a lasting issue, or will the institutions, the treasuries, and millions of retail investors keep stacking SOL for the rest of this bull run? Let me know what you think in the comments, and I'll see you next time for more of the very latest.